Welcome aboard, traders, on another session of charting across the board. Today, specifically, and on a very detailed note, we're going to be diving into the price action mainly for Bitcoin on this stream. I'm going to double check only to make sure the stream and everything is working in the background. It seems to be the case that every time I try to go live, my computer tends to create some delay, which is a little uncomfortable or annoying, to be honest. But let's start with the chart on BTC. As the title suggests, today's session is jumping across the creek within the Wyckoff reaccumulation schematic. For those unfamiliar, jumping across the creek is not a term developed by Wyckoff himself. It was by Robert Evans, who was a successor and another technician and practitioner of the Wyckoff schematic back in 1930s until 1960s. Okay, we are going to compare two variables within the price action on Bitcoin. Within the trading ranges, is also very key to note, or very important to know, that during reaccumulation the price moves within a trading range, creating a series of higher lows and higher highs. And this range is typically includes several key events, right? The spring, the test, and the breakout. Where are we currently on Bitcoin? We're going to be diving into the technicals, and I'm going to portray my interpretation of the technical information that I've been doing for over years now, nearly 10 years, entering next year. So for now, it's 9 years, entering 10 years since 2015. It's been a long journey. Of course, I did not know anything when I started. Like many of us, we started from scratch, from zero, and started learning through the process, right? So let's start with the price action on BTC. I hope each one of you are doing fantastic. We are starting the first day of the week, a new trading session, and hope you guys are making some consistent profit. All right, to start with the chart on the price action for Bitcoin, where are we currently? As many of you do not know, we have been tracking the lows. Okay, only to bring more context, as an update of the previous stream. This is a public stream. We're going to be doing this often, at least twice or once a week. The rest of the content, of course, is being more consistent with updated levels and charts and discussions in the room. Okay, up to anyone who wants to join. There is no obligation. Okay, to start with the most important level, okay, most important factor here, we're going to be diving into what we said in June 23rd. We were tracking for a cycle low based on other time analysis that we did in the room, and we were portraying the following. This is, of course, posted by me. In order to continue to present unbiased perspective, and as we are looking for a potential low for July 4th or the 5th, or between those 2 days, the following readings based on Wyckoff schematic is often mistaken whether the price action is within distribution schematic or reaccumulation. We were aware of these two because they tend to present similar trading ranges, but there is one key characteristic, one key character that differentiates between the two. And this is, of course, breaking below the previous structure, resistance, negating as support or as resistance once again, defines basically a continuation and distribution. To put more details into the context, we're going to be moving into this naked chart, right? There's no drawing tool, no patterns, nothing. We're going to be only eyeing here. This is based on the weekly time frame, which, by the way, we close a second consecutive positive weekly session on the price action for BTC, and there are, of course, new variables to consider, right? Once again, a trading range is defined at least with 2 candle closes, either on an hourly for intraday time frames, the 4-hour, the daily, of course, defined 1 day, and now this one is based on the weekly, where we do indeed continuously have a trading range defined by 2 candle closes. Okay, this is more consistent, that give us that data point that we need. Candle close at the previous peak or the previous high at 71,000, and another recently. This one is a key variable that we're trying to identify if this is indeed a spring action within the Wyckoff reaccumulation phase, and also the jumping across a creek. Jumping across a creek, once again, was an analogy brought from Robert Evans, who taught the Wyckoff method back in 1930s to 1960s. Basically, after Wyckoff passed away, he carried upon his work and his research, and of course adjusted new variables. Following the work of Robert Evans, we then have what we know today from the work of Dr. Hank Pruden. Okay, this is the most popular research that most of you are aware of. All the schematics are being carried, which is also Mr. or Dr. Hank Pruden was also one of the Wyckoff pioneers, right? Along with David Weiss, of course, with his modern adaptation of the Wyckoff schematic. Okay, so here, all of this, of course, is interpretation, right? Wyckoff himself talked about intuition, and the interpretation of the information is up to each trader. Okay, as we started mentioning, a reaccumulation occurs after consecutive higher highs and higher lows after a markup action. Okay, right? The phases within the trading range or within the Wyckoff schematic. However, prior to this markup action, what did we have here at the lows? Another trading range for reaccumulation that oftentimes proceeds, not precedes, but proceeds, right? Follow after a markdown, right? This was indeed a markdown phase. All the FTX saga and so on, you guys remember, we're also monitoring the major bullish cipher on the weekly time frame. Okay, however, we did know, or at least based on the interpretation of the information based on harmonic ratios, that this was indeed a larger pending structure back then in 2021. Okay, so of course the idea was a downward pressure, and we were trading accordingly in the previous room. At least what I presented during that time has been the case, right? Along with other teammates in the room, we're tracking the directional trend towards the downside. This is not to say that we were right, because we are not going to 100% get it right all the time, but it's part of the work to being consistent. Okay, so now the reason why I'm bringing this chart here is because what occurred here, right? This is the interpretation. It's very key to understand who you listen to, because some of them may not interpret as this is or was potentially a bottom, right? Before, of course, printing an upward traction with nearly 375%. So if that interpretation from other analysts or other traders was the opposite, then you would have, of course, missed the entire segment of the move, right? Based on the weekly structure, cipher pattern, and also the major momentum towards the upside. Now, we do know, we can clearly see, right, that this phase, this trading range was indeed a Wyckoff accumulation range. Of course, in hindsight, right, everything seems to be easy to understand, but there was indeed a very deep work behind it during that time period. Okay, so you guys know that we would like to talk with facts, right? We never come here and pretend to know anything, but we rather let the technicals speak their own language, right? The readings in the market between the selling forces or competing forces, buyers and sellers arguing who's right and who is wrong. Okay, so now what occurred at that previous trading range accumulation schematic? You guys remember, those who are in the room, we're looking for that spring action. Okay, and that spring action, if you guys allow me here, go into my chart. I would like to portray the spring action only to bring the idea, okay, back then. Apologize for the delay. I'm gonna touch each of these charts as we move along the time. Okay, so back then, a spring action, we were looking at the first test, the 0.886 of this chart back then, right? Reactive move. We got the first reactionary move, but we do know that shark patterns create that extension, the extension wave of the move. That case, in our interpretation, was potentially the spring action, correct? At 15,700. Certainly that was the case for Bitcoin, and you guys are going to understand why I'm bringing this case now. This is a chart from November 9th of 2022, right? Basically near the bottom where other interpretation were, or right? At that time, what followed was a markup action, basically, right? At this low. If I reconstruct that event only to portray the idea and why we're talking about reaccumulation here, you guys are going to understand why. This was indeed the idea back then, of course. Here we got the 224, I believe, was the case in this manner. That was the spring action. This is a bullish shark harmonic structure with an extension of 224 between the legs B and D, or the waves B to the D, okay? And that was indeed the spring action we were looking back then in 2022, heading towards the next 2 years now in November. And what occurred after was indeed that after a markdown, we printed the accumulation followed by a markup action, okay? Now, in between the phases, we know that there are other trading ranges, right? And these reaccumulation ranges can occur in every trading range, and also similar in context as distribution, right? This is why Wyckofians tend to mistake these ranges between reaccumulation or distribution. It was indeed in our case, in the trading community. By the way, none of these represent financial advice, but rather an interpretation of the technical information, my friends, okay? So we were looking, of course, at this trading range. Everyone is aware of this trading range, okay? Right? Previously, I personally thought that this first test back in May, 57,000 or 56, was indeed the spring action, but rather that turned out to be the secondary test within the trading range. However, creating also another upward move of nearly 25%, between 25 and 30% if we anchor the previous low, okay? Of course, we did not know at the time, but we were gauging new information after a higher low, thinking that might be the spring action, regardless, creating nearly 20% since identifying those levels, right? And of course, as I said before, we're not trying to talk here with balonies, right? But we like to present solid arguments and facts that we were tracking based on our research and work, okay? So that case, just allow me 1 second, that case back in May 13, okay? May 13, the idea of the spring action, of course, because I see that many around the crypto space or the crypto industry are presenting this reaccumulation schematic, which, by the way, is absolutely can be the case, right? But I would like to portray the levels I am personally tracking and why I consider that it can be indeed the case, until, of course, violating the previous structure support that was regained, right? Recaptured, reachieved at the 53,000 for the cycle low that we were monitoring for July 4th and the 5th, right? So using the current information, that was indeed a cycle low, right? And what occurred after the cycle low? We printed an upward move of another nearly 30% move, right? A massive move based on swing trading. Reason why I still remain in my longs, not here, but at 56,800, right? We mentioned that level was indeed a zone to be recaptured before that move to the current levels. And I'm going to remain long until the price action tells me otherwise, right? New variables present in the chart. Until then, I remain within my longs, at least for now, within the swing trading, of course. And I'm going to explain why, okay? Until, of course, further evidence that a technical damage is presented in the price action for BTC. So now to go back into the explanation that I was diving into July or May, I believe it was May 13th, if I remember correctly. Let's go back into that time. This one was the previous chart or the previous schematic where I, again, thought that the first test at 56,000 was indeed the spring action. The higher lows presenting another upward traction where we indeed navigated towards the 72,000 before making a new lower low than the previous low, right? So the upward move still occurred, not necessarily the way we expected back then. However, we also identify a bearish butterfly in this segment of the move with a type 1 and the type 2 return that created that downward pressure to the new lows. And now, as we're moving into new information, right? We're trying to remove any preconceived bias in order to act accordingly. Now, the current information that we have in the price action for Bitcoin seems to be similar. Instead of the spring action, if we remove that as a secondary test within the trading range for reaccumulation schematic, that theory may be indeed valid, okay? And why? I'm gonna, again, go back into the current information once again, okay? Because we're talking here with facts, okay? We started all the way from the previous accumulation at 15,000 with the spring action, and now we're following, right, continuously updating the new information for over 2 years now, okay? So now if we go back into that current information or the new information after more data presented in the chart, this information to me can still be indeed considered as the spring action. Previously, you guys remember, I thought here at 56,000 was indeed the spring action. Regardless, we made another upward move before printing the bearish butterfly that we're tracking in the room also, right? The idea was a short execution at 73. It never reached my personal execution at 73. We rather printed 72,700 on futures, okay? It's not that we cut every single move here, but we're trying to, again, present arguments and trade accordingly, okay? So here is a type 1, type 2 correction, right? And this is where we identify the cycle low, and the longs were presented at 5,700 and 700, 57,700, as well as 5,600 and 800, despite the blip move here at 53,000 that was potentially presenting characteristic of a spring action. And now jumping across the creek, a term once again brought by Robert Evans back in the 1930s and 40s, right? Successor of the Wyckoff himself. So now, how high can we go? Can this be a level, right, that we may start reversing and only print another lower high than the previous high within the major time frame? Okay, can that be the case? You guys are already aware that anything can change at any given moment. This is indeed the case. Oftentimes anything can happen, right? We're trying once again to present unbiased perspective. Okay, everyone, thank you for being here. Hussam, buddy, good to see you, my friend. Peter Sheepers, I see that your message was retracted. I cannot read it. If you want to type again, I can go over the comments soon. So now, where are we on the price action for BTC? Once again, we like to talk with facts, my friends, okay? So within the price action, we were tracking in our room the current levels, right? It's not that we are not aware to where we are. We're tracking and projecting that 68,000 region was in our radar, 68,100 over still to 69,500. Where did we go yesterday on BTC? Pretty much at that projection, right? 68,400 and change, I believe. And now, of course, turbulences in between. This was also expected because I mentioned that but profit taking levels from the entire segment of the move may be in the cards at that range. But given the larger structure, right? This is only my interpretation once again. Given the larger structure on the price action for BTC, given the trading range mainly, and also another key important factor here that I would like to make a comment on is a hidden bullish divergence implying continuation structure of the prevailing trend. That can be the case. We are going to, of course, see how the data develops and continues to print, because that level after the weekly session close yesterday, that was indeed a major move. Of course, Bitcoin can always correct and reverse the entire segment of the move and break the prior support. But as of now, as long as we're remaining above the previous support that was recaptured basically after breaking slightly below, this is what we know that spring actions are common for, or are known for, right? Creating that false breakdown before the continuation of the markup action, okay? Which normally is only a consolidation phase where smart money or big money tends to accumulate more shares of BTCs, right? If that's the case, we then can expect, of course, if this is indeed a markup action of the reaccumulation schematic, we mentioned that that can be indeed the case with the upward breakout towards our target of the major ABCD on the weekly. Those who are following are already aware about what I'm referring here to, the ABCD on the weekly, the major move towards the X point or the X level that you guys know, okay? It was in the 80,000 region, okay? We will see, okay? But that only will be a sign of strength between the levels, or between the schematic, within the schematic of the Wyckoff reaccumulation. Can that be the case? We don't know. We never know what's going to happen in the market. There are periods of trial for errors in our early beginners, but then as we mature in this industry, we then start to accept that anything can change at any given moment. Mark Douglas suggests this, a very, very influential person in my trading career. I never met him, but I have read his books, and I need to pretty much agree with them that 80% of this game represent a psychological factor. 80% can indeed be psychological, and 20% can be technical or methodological, as he suggested in his book, in the Disciplined Trader. Okay, that can be the case. Again, over the years, I noticed that we tend to rather focus on predict moves and get some type of compensation, not a compensation, or some type of gratification when we are right. And trading is really not about being right or wrong. Of course, you want to be right more often than not when you are in positions, right? If you're not in position, if you have now no skin in the games, you can make any projections. But when you're an influencer and have a huge following, you as a trader need to be aware of your words, and of course the members who follow them. I'm talking about big accounts, right? You need to be aware that nobody really knows what's going to happen in the market. Here, what we do is trying to identify those potential turning points based on the legends of the past. And let's bring another case here for BTC, because if we are within the same context, within the same reaccumulation case, right? The same schematic back from 4 years ago. Are we starting to do Wyckoff only now? Absolutely not. You guys know me. Those who are following for over years now know that we are first, we move into all the conventional patterns, right? Wedges, rectangles, and so forth from, of course, Richard Schumacher, right? The Bible of technical analysis. Of course, we then move into other legends of the past. Garley himself, Wyckoff, Gann, and of course, the father of technical analysis, as many of you know, is Dow, right? Charles Dow. Charles Dow on the left, Garley, Wyckoff. Today we're taking the time to do a Wyckoff analysis, right? And now moving into Wyckoff analysis once again. That is the case. I'm not sure I was portraying the website. If you guys want to visit marupsix.com, you can follow us there and connect with us. And the rest, if you're interested or not, is up to you, okay? So now that we are talking about Wyckoff here, right? Let's move back into another schematic for reaccumulation ranges. When was the last time we perceived a reaccumulation range on the previous cycle? You guys remember? July 2020, July 6th of 2020, and we chart on Bitfinex. The same schematic was presented back then. Of course, each time in the market is different and we adapt to new information. But if we go back into July of 2020, okay, July 6th of 2020, right, 4 years ago, with the same argument of Wyckoff reaccumulation. If we go back here, that was the case from July the 6th, right? If we reconstruct prior event that can take place on future price development as our theme goes for forensic analytics, we can then revisit that same chart and see what occurred here on July 6th, right? On the daily, July 6th of 2020 was indeed, you guys remember, following the crash of COVID crash, right? However, that was indeed another spring action on the reaccumulation schematic on a minor degree in this case, followed by this reaccumulation case, right? That case, once again, this trading range was certainly a reaccumulation, because what occurred after, right, is history, right? Those who are following our work from years now are aware of these levels. Since 2020, the same arguments were presented back then, prior to joining market makers, right? The rest, of course, is history, nearly 600% move. However, each time in the market is different. This doesn't mean that if we are indeed going to print another reaccumulation schematic here, we're going to move another 600%. Can that be the case? Again, my friends, anything can happen when it comes to trading. This is all interpretation of the market information. Nobody really knows, and that's the truth, right? We are now up to price discovery. Can that be the case? You guys already know the answer, right? However, what we're looking here is a completion point of the major bullish cipher that was also presented, and you guys already are familiar, those who are in the room. We're looking for this major ABCD minimum, right? A conservative move for this ABCD that can take us to the 1272. As you guys know, many moves tend to terminate at extensions of prior swings. The prior swing was the major bullish cipher, highs to the lows, to where? To the 1272, right? Minimum. Again, this is a conservative price move for Bitcoin, okay? We're pretty close. Can that be the case? We will see, and we are going to, of course, adjust to new information as more data continues to construct in the price action. Everyone, thank you for being here. You guys know we're trying to present unbiased perspective and move accordingly without having the crystal ball that everybody else has, right? In the space, at least. Peter, salute, sir. Hope you're doing great. I'm doing great. You guys know life is not as easy, right, as many portrait, but we are pushing forward, looking forward to do a good job in this space, right? Presenting unbiased perspective once again. Everyone, thank you for being here. These are the arguments I am personally tracking. We have other levels. Of course, 68,000 was our first projection. We achieved those levels yesterday, right? I'm still in my long based on the major structure, right? This is, again, only my interpretation. You guys do not have to follow me, of course. I'm only presenting evidence or arguments for the technical interpretation, okay? The next level, if we continue to go higher, because you guys already are familiar, those who are following us in the room, you guys know that we're tracking, we were first tracking the 68,000 region, correct? After also bouncing from the medium line, the action reaction rule, those who are familiar, we were tracking the 0.786. The next one that follows is the 0.886. To make a comment and to finalize the stream here, one of the levels that is also worth mentioning is that after recapturing the key technical level, which is the 0.618 here, right from the previous high to the lows, After recapturing that level, the key technical zone, once again, the golden zone, the golden pocket, this level now becomes key once again, 64,965 basically, right? Yesterday we have a test of the outer trend line, another action reaction, right? From that low at 68 or 65,800, we created an upward move of nearly 4.20%, right? To 68 and change. Now the next level, of course, remains for the 0.886. There are certainly a level of liquidity, right, for resistance at the previous upper trading range, or the upper range of this trading range. That will be indeed a level to break, or it will be difficult to break. But given the arguments between the Wyckoff reaccumulation for the jumping across the creek, which we might be within that level, that can be the case because spring actions, once again, at times present another test, right? As a confirmation low, that the lows has been established. We then have a confirmation low as a retest of the spring action, not necessarily at the lows, by creating a new higher low than the previous low and continue the upward traction, okay? If we go lower, I don't want to go and make any comments on that yet because we're trying to move accordingly, right? This is a current daily session. The bear cipher was indeed respected, basically, right? The projection was respected, creating these turbulences as of now. Those who are harmonic traders are aware that we normally have type 1 and type 2 returns, right? Basically what occurred here, those who are following in the room, we're aware of this bearish butterfly, right? We're tracking the type 1 reactionary move, then we capture or we identify the type 2 at the 1.41. However, as I mentioned before, I was looking for that 1.618, right? Slightly higher than 72,700 on futures, right? Nevertheless, this was indeed a type 2 return, meaning a reactionary test of the first completion point, a secondary test marking another double top basically before identifying the cycle low, and now this is where we are. Everyone, we will see indeed if Bitcoin is going to construct the next markup phase as we move into the next important time and price action expected for the following month. Everyone, thank you for being here. I hope you guys enjoy this insight, and if you are enjoying this type of content, you guys are welcome to follow us. Everyone, much love and respect to everyone. I'll see you guys on the next one, and remember to live a life with an attitude of gratitude. Cheers, everyone.
Everywhere we go, people know who we are. A team from